Hey guys, I'm Tim Kotzman here with Greg King, founder and CEO of Rex Financial. Did I get that right?
You nailed it.
All
Good to be
right,
here, Tim.
awesome. Do you want to maybe start by just telling everyone about yourself, your background, and how you came along in your journey to Rex?
Yeah, sure. I guess I started off working at Barclays Capital in London, actually 20 some odd years ago. So I was in equity derivative sales and trading. So totally different environment, like trading floor, a lot of buzz around you. Um, but I learned a lot about our sister company. Barclays at the time owned iShares before they sold it to BlackRock. And they were sister company. It was actually one of my clients. I'm originally from California. I guess they didn't have anyone in London that wanted to fly to San Francisco on a regular basis. So that was me. And my career evolved to the point where I found myself building a suite of custom product for the iShares guys. They basically, GLD, if you remember, the gold ETF had launched in 2004.
Mm-hmm.
And so trying to wrap commodities into an ETF was like the big thing. And that was before people figured out some of the workarounds that now allow for that. But we created a thing called the ETN, so exchange traded note. It's kind of a US centric uh, product. You don't really need that in other jurisdictions in Europe and Asia. But in the US, because the commodities run up to the CFTC and securities go to the SEC, kind of needed to build a solution. So my team built the ETN as the first thing to track commodities on a broad-based index in the United States as an exchange traded product. And I sort of evolved into the ETN guy in the industry and built that business for Barclays. Then I founded a company called Velocity Shares. We did a lot of leveraged commodities and leveraged VIX, actually, and sold that business about 10 years ago. And that's when I started Rex. We were Rex Shares for a long time and became Rex Financial recently.
Okay, a couple different ways I want to go with this, but the what's the relationship between Rex Financial and Tuttle? Because one of the um,
Mm-hmm.
2x long ETFs on MicroStrategy. It's T-Rex, and so yeah, just
Yeah.
curious what the relationship is there and how
Yeah.
everything kind of operates.
Yeah, great question. We have effectively the T-Rex product line for us is a JV with Tuttle.
Okay,
So Matt Tuttle's the portfolio manager. He handles all the day-to-day trading of it, him and his team. And then we sponsor the product. We're in charge of like sales and marketing, distribution, and generally we have a bigger footprint than Tuttle. So we teamed up. I was listening to one of your other podcasts about, I think it was James Seifert from Bloomberg, and he was talking about single stock leverage ETFs. And this thing is such a phenomenon, really, the way it's developed over the last couple of years that we were actually we knew the Tuttle guys were actually working on the same exact product
mm-hmm.
at the same time.
Mm-hmm.
And just so happened that we disclosed that to each other. And I was like, do we want to sit there and compete with each other? Or should we just team up and kind of, 1 + 1 = 3? And so we decided to team up. These are, not rock bottom fee levels on these products, right? So there's enough to have a good partner. So we have a good partnership with those guys. That's only on the T-Rex suite of products. We have about 9.5 billion under management, and about a third of that is that T-Rex.
Okay, and I saw on your
And plus,
website.
we had the perfect name, right? Like our name is
I
already
mean,
Rex,
it's a great
and
name.
they're Tuttle, so we were like T-Rex. No, why not?
It's a great name. So
Yeah.
tell me if I'm missing anything here. On the 2x long, you have products 2x long on MicroStrategy, Bitcoin, Ether, Tesla, Nvidia, Apple, Alphabet, Microsoft, and Netflix. And then 2x short on MicroStrategy, Bitcoin, Ether, Tesla, and Nvidia.
That sounds right. Yeah.
Um, I actually had it as a question when you were describing the ETNs, exchange traded notes, because James had brought that up. Is that something that you could launch a product on to get to more than 2x leverage on a product, or how would that work, or how does that work with the ETNs?
That is actually a very good question. So strictly speaking, yes. Yes. We could launch 3x Microstrategy tomorrow. However, ETNs are issued by banks. They're basically a fully funded total return swap, or not fully funded, like partially funded total return swap is the way to think about them. And so at the end of the day, all this risk recycles around to, a few buckets. Like somebody has to wear the risk of overnight massive moves. And when you're, let's say, take a step back. If you're the product holder on a 3 times levered product, right? You put up $100, you're controlling $300 worth of exposure. And then that gets reset close to close. So 4 p.m. to 4 p.m. Question is, who eats it if the price moves down by greater than 33.33% during that time, right? Mm-hmm. And so if, for example, this was a margin loan, then your broker would call you up and say, hey, you owe me money. But with ETNs, they're not. So the answer is the bank. The bank eats that. If they had a 3 times levered product that they had put out into the market, they are buying the stock to hedge themselves. But if the stock gaps down, so that's how they talk about it, gap risk. If the stock gaps down, let's say 50%, then the product in the market's wiped out. It's worth 0. But they don't go after all the ETN holders and say, hey, you owe me more money. They can't, right? They're non-recourse. So, banks are conservative and the risk limits. I mean, no stock has, shouldn't say no stock, but it's very rare that a stock has moved 33% in a day. Certainly not 50% typically, but they still have those concerns. So, we've got a great relationship with our bank that we've partnered with on our ETNs, Bank of Montreal. They're not so interested in 3 times levered, MicroStrategy, for example.
Got it. So I guess by the same line of thinking, MicroStrategy, as an example, going down by 51% in one day is not really something that you're anticipating, or what would happen, I guess, in that scenario.
To the existing products,
correct? Right.
The ETFs, yeah. So in that scenario, you would have a situation where the NAV of the fund. I mean, if we're talking about purely, a fund that is holding pure 2 times long exposure, if it goes down 51%, the fund's NAV will be technically negative, but effectively 0 to the shareholders. And so the swap counterparties and the prime brokers would probably bear that loss because there's no recourse. And that's why, to segue into some of the other stuff, that's why there are issues and concerns, because the moves you've been seeing out of MicroStrategy are phenomenal, like up 25% in a day, etc. That just doesn't really happen typically.
Hey guys, today's episode is brought to you by Stampseed. If you're in cold storage, you know how important it is to protect your seed phrase. That's why I recommend you head over to stampseed.com and check it out for yourself. This seed phrase storage device is one solid piece of titanium. There are no loose pieces, and you can hammer your seed phrase in letter by letter. When you go to stampseed.com, use promo code TIM15 for a 15% discount across the website. That's TIM15. Can you touch a little bit on what Matt Tuttle has said as far as the prime brokers offering $20 to $50 million worth of swaps, where at one point last week he could have used $1.3 billion? Like, how does all of that kind of work? And is there any kind of line of sight or possibility that that situation could improve as far as the swaps versus using options, if I'm understanding it correctly?
Yeah, so I think that just in 2 parts. First of all, the way swap lines work is, you sort of have a credit limit, like, hey, we'll give you up to $200 million of exposure to this particular name under these particular terms. And, banks want those limits to be within their overall limits because, we don't know who else they're dealing with, right? Hedge funds, et cetera. So they've got some overall limit, and then they kind of parcel it out to all their different clients. And, that every bank has different ways of administering that. But at the end of the day, they're going to have some limit on every exposure, right? The regulators require these kind of things, and for
Mhm.
good reason. Most of us are old enough to have lived through '08, right? So that wasn't fun. But where you have derivative-based products, you don't really have a choice. You have to use these types of instruments to get that exposure, and then you're at the mercy of, the various counterparties and the various banks. I think with MicroStrategy, though, I do think there's light at the end of the tunnel. We're constantly talking. My team, one of the values we bring to the table is we're all a bunch of ex-bank guys, and we know the street pretty well. And so some of the larger names haven't opened up their swap lines to MicroStrategy yet at all, right? But they have large capacity, large balance sheets, et cetera. So similar to how it took people a while to warm up, it was a while before BlackRock warmed up to the idea of a Bitcoin ETF.
Mhm.
And then now you've got Larry Fink, embracing it. So it's not a perfect analogy, but the point is, when something's new and hot and kind of wild, the bigger the bank, the more sort of cautious they are. But at the end of the day, it's really just another stock. The mechanics are all there for doing stock-based swaps. I suspect it's just a risk question internally, and people are trying to get their arms around, like, how much of this should we put on balance sheet? And once we say, just think of a very large bank. I don't want to name names, but just think of the top banks in the U.S.,
Mhm.
right? To my knowledge, not a lot of them are doing swaps on MicroStrategy at the moment, probably because they don't know exactly how to anticipate the level of business they're going to get. And then, they don't want to turn clients away, right? We're getting told different things, and they know that that's not what we want to hear. And so if we can go elsewhere, we will. So they don't want to turn business away either. So there's a lot of thinking required, but I do think that as TradFi gets a little more used to what's happening with MicroStrategy and understanding the story and really understanding Bitcoin, because it's a big part of it, that will open up. But like a lot of things, the market sees something that it likes, and it tends to just drive it up very quickly, sometimes in advance of what the ecosystem can really handle.
What do you think the top contributors to the bigger banks, so to speak, being more comfortable or being comfortable with the risk would be? Is it, as you said, the education around Bitcoin, or just kind of some length of time, whether it's weeks or months, or is it like liquidity, trading volume, or something else?
I mean, it's a combination of all that. I think time is definitely a big part. I wouldn't be surprised if we see in the new year, a lot more open up, a lot more capacity open up.
Hmm.
Um, I think, let's face it, like, why did this even happen? This happened because of the election, right? And that was what, beginning of November, and here we are, December, beginning of December. So less than a month. Basically, people in the crypto or crypto adjacent world have bid asset prices way up. That's not an opinion as to whether they're over or undervalued. I think the bid up actually makes a ton of sense.
Hmm.
But that's a lot to expect, big TradFi to kind of, like, adapt to in a month, right? Going
Sure.
into year end, going into bonus time, going into, forecasting for the future. Like, it's not surprising, but I do think there's money to be made by the banks in this stuff. And when that's the case, they find a way to work it out.
Got it. Did you have an expectation? I think it was September 17th, or around that date, when you launched the MSTU product, as far as what the inflows would be, both then and I guess after the election. Um, did you have an expectation, and did it exceed your expectation, or how did you kind of think
Yeah,
through that?
it definitely it exceeded our expectation. I mean, we do see that, for example, the largest leveraged single stock fund is NVIDIA related. and it's, I don't know what it is today, but it's been over 6-7 billion at times. So we sort of knew it was theoretically possible. However, NVIDIA is embraced by, TradFi generally, right? To be interested in MicroStrategy, you kind of need to be a Bitcoin person.
Mhm.
And so we thought that was a smaller universe. So I think we expected it to be MSTU is our fund. We expected MSTU to be $1 billion fund. I definitely didn't think it would hit 3 billion in 2 months, which is what happened. So it definitely exceeded expectations.
And that's an interesting stat. Yeah, I saw as of today, 3.01 billion. If Nvidia is 6 or 7, and this is already at 3, that's a
Yeah.
lot of potential running room.
Yeah. And if Saylor's right about the price of Bitcoin, then kind of forget about it.
Yeah. How would you explain volatility decay or decay? I mean, you hear all these things about, well, some of these products have decay, and it's like, okay, I, um,
Yeah.
yeah. And I guess to back up for a second, like I've used the product. I'm not here to say anything negative about the product. I'm not here to endorse the product. I'm really just, I think a lot of people would like to understand as much as they can, and as much as
Sure.
you're able to share about all of this because it is so new. I think that's, more so the
Yeah.
case.
Yeah. So volatility decay relates to options, right? And uh, I could give a real technical answer. I'll try and give a somewhat broad-based answer, so that hopefully everyone listening can kind of understand. When you're long a stock, whether you're long 1 times or 2 times or 3 times, that exposure is basically a straight line. It's a linear exposure. As soon as you introduce optionality into the portfolio, that is a kinked line, because options, um, you pay a premium and then they either expire in the money, and so you're making money, or they expire below and they expire worthless. And so your payoff profile kind of does like one of these, right?
Mm-hmm.
And the minute you introduce options into a portfolio, unless you reverse out that exposure by essentially uh, buying put call combos and you know essentially pairing it with an opposite exposure, unless you're able to do that, you're going to have volatility decay and theta decay in the portfolio. And that's just really a function of the way options are priced by the typically the Black-Scholes. And what it means is that volatility gives options value. If you think about it, you buy an option on a stock at today's price. If it zigs and zags like crazy, there's a much larger chance that a month from now when it expires, it's up here, like way up, right?
Mm-hmm.
So that's a high vol stock that's going to have a higher price. If you're buying on some steady Eddie utility company, it just kind of does this. There's really no chance it's going to be here. So that's a low vol stock. It's a lower priced option, even with the exact same terms. 1 month at the money, whatever. Um, as you get close to expiry, there's not any time anymore to sort of zig and zag, right? And even if you had a high vol stock, well, it's only 2 days left or a week left or what have you. So as the option becomes closer to expiry, the potential upside that's built into that price, whittles away, right? Now, if you're closer to those levels, then it doesn't whittle away, but it depends on your strike price. So there's a lot of complexity in dealing and trading with options, and all that kind of flows through to the products. And so what you find is, when you've exhausted swap capacities with all the willing participants, the banks, you have to turn to the options market. And unfortunately, we cannot turn to the options market the same way hedge funds can, for example, because these things are publicly traded, regulated under the 40 Act, and there's rules around kind of how you can, the stuff you can trade and how you have to finance it. And so we're not able to we kind of have one arm tied behind our back in a way, where we're not able to do some of the more sophisticated trading that could actually relieve some of that pressure. So you do see some of that. And our product has both underperformed and overperformed. Some days it's actually performed greater than 2x, and some days less than 2x.
Can you go into what the ETF holds? I saw the number of holdings is listed at excuse me, is listed at 15. Just curious if you could touch on some of those holdings and how they either work together, complement each other, and why that basket is what it is.
Yeah. So starting from first principles, if we could just borrow the amount, borrow a holding the size of the fund and just buy MicroStrategy stock in sort of 2 times the amount. Okay, perfect, done. That would be the best. Again, the regulations don't allow that for mutual funds. So your largest position can only be 25% of a fund, for example. So we do own a big slug of MicroStrategy stock. So that's number one. Number two, second best thing is a pure swap on the stock, which essentially it's a contract with a bank. It says we're going to pay you for the performance of the stock if it goes down, and you're going to pay us if the stock goes up. And it's just you're swapping exposure. It essentially is having someone else do your investing for you, but at twice the size. And so they have to handle the need for coming up with additional capital to provide the leverage, and the fund takes the benefit of that without having to do that itself. So that's number two, and we always try and max that out. It's fluid though, so I won't comment on exact holdings today, for example, but we try to max out the stock bucket first, the swap bucket second, and then third, the options market, right? And so we're long a bunch of calls. There, it's all disclosed daily on the website as is required. And we try and spread them out, across different expiries and things to minimize, roll risk and pin risk, really. So, but that is where you do see the introduction of theta decay and the effects due to volatility. So, for example, just looking at it earlier today, MicroStrategy implied vol in some of the stocks was up over 200%, and then it's declined a lot in the last week. Well, that would have just sitting there, even if the stock was flat, that would have decreased the value of the options in the portfolio. Just that move alone, because what that means is people are pricing in less and less volatility going forward for MicroStrategy. So they don't think it's going to be as volatile as it used to be. And therefore, the options that you've got aren't as worth as much as they used to be. But keep in mind that cuts both ways, right? The week before, the move was in the opposite direction. So just sitting there long calls where implied vol is going up, you would have experienced an increase in the price of that portfolio, even if all things were just flat otherwise. So it's just a new risk. All this is in the prospectus and so on. Not sure a lot of investors actually read those things, but it's all in there. And these are target 2x funds. So we try and optimize as best we can given those constraints.
Can you speak at all about the do you have a target delta that you update each day, or how do you think about that? And is that like a trader doing it, or an algorithm, or something else?
No, I mean, this is all live traders. So, and the target delta's, 2, it's 200% fund. So that's the target delta. I saw the report tonight that we think our delta tomorrow is going to be 1.98, right? So yeah, I don't remember if we published that on our website, to be honest. I know we published the holdings, but we're targeting 2 every day. And we see that report from the trading team.
Got it. I see on social media, people love to point to just one period of time and not even necessarily any specific ETF, but that, MicroStrategy will be down 0.3% and some levered ETF will be down 3% or like 10 times. But that's at like one moment in time. And like
Yeah.
when I zoom out, just speaking for myself, over the past month, MicroStrategy's up roughly 63%, and the T-Rex MSTU is up 116.44%. So I mean,
Right.
it's not like it's wildly off when you're
Yeah,
zooming
no,
out.
and like I say, it's cuts both ways. We don't get as many posts on the day where it outperforms, the
Right.
data that everyone's like happy and goes home for supper and doesn't post. But that's just human nature. The other thing I'll throw in there, that is a little atypical, is that we've been seeing our fund and some of the other funds in the space um, close at a premium or a discount to NAV, right? So we actually had a day the other day where it was a 3% premium, I believe. Not entirely sure why that happens. It's somewhat rare, but I think just with some of the uncertainty that's going around with relation to the banks and the credit lines and so on around MSTR, I think traders are just a little cautious or they're trying to guess what's going to happen next day.
Mm-hmm.
In terms of the portfolio holdings. Like if our leverage is a little lower, they think, okay, probably tomorrow we'll figure it out, and they're trying to bid it up. But anyway, if you have a 3% premium built into the price on the close, and then let's just say the next day everything's flat, but nobody feels like paying a premium anymore, you're going to fall 3%, and nothing, and it's inexplicable. Right.
Mm-hmm.
So there's just a little bit of supply and demand there. These are huge dollar volumes that are going through this stuff. And they're not as readily arbitrageable as some of the other funds, S&P 500, for example. That thing never closes at a premium or a discount because 3 basis points and, huge desks will arbitrage that away. The underlying portfolio being just MicroStrategy stock, but with some optionality built in, difficult to borrow or what have you. I could see why these small single-digit premiums and discounts are happening. So that's another factor that's kind of like influencing day-to-day performance when people are looking at these numbers and then kind of wondering what's happening. But to your point, I think in the long term or the midterm, right? Because we always say these products are not really buy and hold investments, right? These are position trading products, whether you want to position for an hour, a day, a week, maybe a month is getting a little long without readjustment, but because they do rebalance every day, it's not just a straight, 2 times exposure if you sit there and hold it for a month. Could be less. And that's just math. Hopefully everybody understands that.
Mm-hmm. When the fund executes the trades, does the fund pay taxes on the trades? Does that flow through to the investor? How does it work from a tax standpoint?
Yeah, so the fund will have some kind of tax related effect at the end of the year to investors. That's one where we just kind of like hear to the accountants. Mm-hmm. They figure it all out. Again, with these funds, there's a lot of transacting, so they are going to have some taxability, but it could cut the other way if there have been losses in the portfolio, right? So I know our PMs try to keep that in mind, but at the end of the day, they have to do what the fund's purpose is, so they can't really, they can optimize within that strategy, but they can't. You say, oh, you know what, tomorrow we're going to go to cash now because mm-hmm. We don't want to generate any more gains.
That makes sense.
Yeah.
Some analysts are saying that the funds are contributing to the quote unquote furious rally in MicroStrategy shares. I mean, that would just logically make sense because there's some portion of this 2x long ETF that that holds Microstrategy shares. So if more people are buying the ETF, you guys would be buying more Microstrategy shares. Am I tracking along what like the basic reality is there? I mean, it's like, yeah, exactly. Or am I missing
Yeah,
something?
I mean, absolutely. I don't, I haven't looked at the relative numbers, but I still don't think it's huge with respect to the flows that are going on around these products just in MicroStrategy itself. But clearly, um, our fund is roughly 3 billion, and the other fund's a little smaller, maybe half that size. But you've got close to 5 billion that's been put to work in long MicroStrategy, plus 5 billion of borrowings effectively. So yeah,
Mm,
there's sort of like an extra 5 billion that went in via that leverage.
got it. Is there
Yeah,
anything?
I
Good.
you know what though, to be fair,
Mm-hmm.
right? It's not like that all came in at once. So it's really not 5 billion that came in. I probably shouldn't say it that way.
Mm,
These funds are this size because um, they're levered exposure to something that's up 100% in like a month, or I don't know. I need to look at a chart. I can pull up my Bloomberg, but um, it's actually a lot less that went in, right? This
yep.
uh, our fund is 3 billion. It doesn't mean we gathered 3 billion of assets. We did not receive 3 billion of inflows and then just go turn around and buy, the S&P 500 type of thing, right? We received, I don't know, maybe 1 billion of inflows, and with the price action, everything's kind of gone up quite a bit lately.
Makes sense. Yeah. If MicroStrategy's up 63% in a month and you're 2x that, then yeah, that all contributes.
Yeah.
Is there anything else that you think's really important to touch on or walk through in relation to the MSTU T-Rex shares ETF, or zooming out, talking about um, the your firm and other things that it's doing or maybe planning to do here in the near future?
Yeah. So I guess I will say the T-Rex suite we're proud of. We've got, the NVIDIA fund as well, a Tesla fund. And we just calculated that our suite of product as a product family has actually surpassed every other issuer in the space. I won't name names because that's not very nice, but you can combine everybody's volume, and our volume is largest overall. And we only launched, a year ago or less with the first T-Rex product. So we're proud of that. Beyond that, the thing that we're really building up is the covered call strategies. We have FEPI is our FANG equity premium ETF. It pays a 2% dividend. It's kind of the opposite end of the spectrum, right? We like to build things that are portfolio tools. So we know some people want to leverage and really have fun trading their favorite positions. That's great. Other people are looking to their portfolio for like retirement purposes. And so we built a product that is opposite end of the spectrum because it is designed to be a buy and hold. My daughter has some of this stuff. Like I have some of it in my IRA, and it is averaged a 2% a month dividend without much movement in the NAV by selling covered calls on a basket of the top tech names that you can imagine. So FEPI has a big following on social media, and we love that part of the business as well because it's not quite as volatile as the leverage stuff. The leverage stuff, you can raise billions in a couple months, as it turns out. The other one's more of a steady eddy, but we literally have people on social media saying, "You've changed our lives, like we could retire now," and all this. Not that we encourage people to put their entire portfolio in it, but it's actually something people are really appreciating. So that's a big focus. We're expanding in Europe next year. We're doing a lot of things. So thanks for asking. But yeah, there is more to life than just MSTU, although I know that's hard to believe.
Absolutely. Um, where can people find you online as far as website or anything else that you'd like to share, and just any closing thoughts that you have?
Sure. So rexfinancial.com, and I'm on X, so at Gregory D. King. I also run a different company called Osprey Funds. It used to be part of Rex. So if people see some of my postings, that's our crypto business. We have a couple of funds. We have a Solana fund that trades. We have a Bitcoin fund that we're in the process of selling to a firm called Bitwise. So we were early in the crypto ETPs as well. And so folks can look at stuff there. We have a bonk trust that we just launched, which is generating a bunch of buzz. And we're going to be launching the Binance, the first Binance ETP on the OTC market later this week, OBNB. So lots of fun stuff happening.
Awesome. Well, super appreciate the time, and we may have the opportunity to revisit as things continue throughout the new year.
Yeah, we'd love to do it. Thanks.
Thank you.